This, I think, is some very interesting analysis in Alphabet. Of course, that is Google. I think there's more trouble ahead. I'm going to give you some anecdotal comments in here as we use YouTube, which is, of course, part of Google, by posting several times a week. Of course, we get benefit from that because we get paid for ads. And also, it is an excellent place to do our marketing. So we're very faithful to posting in YouTube. Our number of subscribers in YouTube over the past year has soared. We've gotten some great exposure from this, and of course, our following has grown is because we've had a great year in analysis, and our monthly views are up over 40%. So it's been just a great year for us on YouTube. Our monthly ad revenues, however, have plunged. In fact, from their peak level, they're down about 50%. So the amount of money we get paid as a regular check from Google has really come down. And it's been disappointing. Google stock has been very reflective of something that's going on because, of course, as the tech stocks have pulled back, the FANG stocks have pulled back, Google's been part of that. But really, based on what we're seeing and how we get paid from Google, from YouTube, companies must be pulling back in a huge way in the amount of advertising they're doing. Because if that weren't the case, we would be getting paid even more than we were a year ago. To me, this seems like recessionary evidence, and even more trouble for Google's earnings ahead. And we've been projecting Google as negative and are still looking for it to go further on the downside. I want to give you a quick look at our analysis as I look at cycle analysis on the Google chart for weekly and daily. And for those of you that are brand new to this style of analysis, please do go to our website at askSlim.com and you can learn about how we do this analysis by clicking on the Cycle Analysis Workshop tab. And there's a very informative video in there which tells you about cycle analysis. So what we're looking at here on the bottom are cycle brackets, which are essentially the ideal cycles. If there was a rhythm where they went up half the way and then down half the way, it would look like this ideally. And there is a half cycle in there, a minor cycle that you can see. And you can see that forming right in here, that half cycle there, and the half cycle right in here, and a half cycle here, which ran a little long, and another one going on right here. This is the dominant cycle, and these cycle lines up here show you the actual cycle as they've formed. And these vertical dotted lines, as you see, are where the actual lows came. And you can see this low over here was a little bit earlier than ideal. This was very close. This one was a little bit later. This one was spot on. And right over here where these two blue vertical lines are, where we expect the low to come in this Google cycle that we're in right now. Now, a couple other important things to show you is that when a cycle rallies as it's supposed to after making a good positive cycle like this, you'd expect it to make a higher high, which it did. Then when it breaks underneath that key cycle low, it's negative, and it says that the decline will likely come through the bottom of the cycle, which you can see it did right over here. This was a similar cycle because it had a breakdown over here and then points to a decline through the bottom of the cycle right over here. Now it's worth noting that on the daily chart in the third week of February is when this low synchronizes on the weekly and daily chart. I'll show you that in a moment. Furthermore, there are fib extensions down over here, which point to the bottom, which right over here was at around 83.5, and potentially coming down over here to about 73.5. This is a very reasonable target for the downside into February at 73.5. Now you can see what happened in here as this broke down, and then you got a rally. It formed the bear flag, and it came up right into resistance and rejected perfectly at the right spot, and it is now moving down again as the stock market is under a lot of pressure after the Fed announcement this week. So you can see in here that Google is still in a lot of trouble and very likely to be moving down into this period in late February. Now remember that our stock market analysis is similar. We're looking for the lows for the stock market to come sometime out in the February-March period. So this is somewhat in line with that. So this is a very negative look with a target over here at around 73.5 sometime out in February. Let's switch to the daily chart. And you can see in here the cyclical patterns are beautiful, really. As you could see where this low came, that synchronized well with where the low came in Google on the weekly chart. And then you had the rally into the resistance area, as you can see right in here, and then turn down. Also, what we have on here is the slim ribbon and the slim ribbon PO, which is on the bottom. And when the slim ribbon PO is green, then you're in a rising phase on the slim ribbon, as you can see. And when it's red, you are in a declining phase when the configuration of the slim ribbon is negative. When you get these red arrows, it tells you that there are likely resumptions on the downside coming, as you could see. When it's blue, it's neutral. You're not getting a lot of information when that happens. And right now, it's red, as you can see, and it's having a hard time even picking up because Google is so weak. So right over here, you could see that there is a low that's due coming out towards the end of the year. Now, remember our stock market analysis, which if you're watching here in the Market Week show, you'll be able to see that in later on in the show, or you'll be able to see it on the clip of that on YouTube. And this support here is at around 87. So we're kind of looking for 87 here in the next week, week and a half. And then another rally that fails because, as we said, the lows that are expected, and if I highlight this cycle, come out to the third week of February, which is what syncs up with that weekly trough that I showed you on the weekly chart. And that all gives us a picture, and I'm going to show you the side-by-side in here, of a negative conditions in here, whereas the reversal scout, which is right here, is now turning down again and failing as it did in that resistance area there and pointing to this daily cycle here, declining out to February towards maybe the beginning of March. And the same thing over here that we're showing on the weekly with that target that we show you at around 73.5, right down over here on the weekly chart. So this is a very, very negative look here at Google, and very much in line with what we see as far as the revenues that we're receiving from YouTube. And just so that you know, Google's ad revenues as a percentage of their overall earnings is about 80%. That's a bad picture for Google, a bad picture for what we see going on in the country as far as business as they pull back in their advertising. I think that's pretty significant, and I hope you found this to be very valuable.